Hi, welcome to the Market Alert for Tuesday, the 10th of November 2020. So yesterday, the COVID cure creates chaos. It wrecks the tech stocks, bonds a bloodbath, and the momentum stocks are massacred as well. But it says here, bulls for the win, bears have nothing. Everything is great, right? This rally off the March lows is defying all technical history. It is entirely built on gaps that are unfilled, which is very interesting. It's not only defying technical history as it states here, but also any common sense logic and any other form of rational thinking or behavior as it comes to it. Staggering, absolutely staggering. So let's have a look at yesterday, shall we? See what the market did. As I warned in the Market Alert about the prospect of Trump actually conceding and how the market would react, I thought when it exploded that was what the case was, but not. And it took a moment or two to actually find the news, which we'll look at in just a moment. Well, let's kick off with the morning session. This is the pre-market. Futures market opens and moves higher, which we can see here. And then I'm just looking at the daily chart to see where we are before the market actually opens. And I'm going to go through this quickly because obviously the main event is what happened just during mid-morning. But here the market attempted to move higher. We saw the sell-in going through the R2 and stopping right at the 200 MA with massive volume, highest volume bar for the period thus far. Then we had a retracement, which we can see there back to the 200 MA. And again, you can see how both of these volume bars are very high relative to the other bars, and then prices are free to move back to the upside, but not for long, as prices find resistance at the left here and then reverse, and then we get a potential sell signal which is filled. The market trades through the 200 MA, but we saw what happened here and here as prices went through this 200, and you'll see that they come back above the 200 bar moving average, and then you can see the market being tested at the low to the left as well. And once tested, prices then come back close above the 200 MA, and as they start to come back following the test, I'm out, because there's no way that prices are likely to move lower unless they can break the 200 MA convincingly. And also, again, we're going through a period of uncertainty at the moment. You wouldn't think so to see the market. So then we have some potential weakness here, which you can see as the market traded back up to 80%, 78, 89% of the previous move from this high to this low. The market stuck it in a sideways range for the first part of the morning. We then have another sell signal where the market trades down to the scalp, and then we start to see a bit of support coming in once more. Once the market broke the 200 MA, moved the stop to break even, and again, notice this bar here, the volume is greater than the previous bar and the range is less. We're also down in this area again, and this is why I've drawn in these areas of support. And as soon as you see this coming in, you know that we've got the prospect of a reversal in price. And as prices came back, got out of the trade, and then you'll see prices moving back to the upside. So now we can see the defined channel, which I've drawn on the chart here. You can see it there. And this is more or less how the market traded during the morning. Then Lagarde came out and she spoke for an hour. You can see there that there's no point in being in the trade. You just don't know what the central bankers are going to actually say. So the market traded sideways while it listened to her, and then we got to the end of the morning session. Then mid-morning, I just happened to be at the desk, and I looked at the chart and thought I need to record this. The market exploded to the upside 4 minutes. So you can see the market trading up. This is 100 points, 200 points, this is 300 points, and then it just kept going, as you'll see there. So 350 points. I'm looking through the daily charts, looking at all sorts here just to see where it's moved. So 100, 200, 300, 350 points out of the blue. And I assume that Trump had actually resigned. And then, of course, after doing a bit of rooting around, again, you can see prices continuing to consolidate and then move higher. I drew in some fibs there to see if the market strength was going to continue, and it certainly did, as we see prices moving to the upside there. Then I found this, which is obviously about the vaccine. It took a long time. There we go. This was on the Sky site. And the prices just kept moving higher. So now 100, 200, 300, 400, 500, 600 points on the DAX from this news. I mean, it's utter BS. But that's how the markets work. So I'm going to fast forward now, because after the initial euphoria, the market then started to trade in a sideways range, and then prices got ready for the afternoon session, and oddly enough moved lower just to surprise people, thinking that we'd have another 600 points to the upside. But we've had this before in a previous market alert a few months ago, when they said they got a cure for a vaccination, and the market moved higher. But this one apparently is ready for delivery and works in 90% of cases. So good luck with that one is all I will say. When you've got a 90, when you actually deal with statistics and odds and risk reward and everything else, I can't for the life of me understand why, where there is a 99.9% chance of recovery from a coronavirus, which is the generic term for a flu and influenza, why you would actually need a vaccination. It just doesn't make any sense to me at all. So I'll have a jab of this stuff, even though there's a 99% chance I'll actually recover from it. It just makes no sense at all, especially something that's not tested properly and comes with complete immunity from prosecution for the government. So very odd indeed. So anyway, I just don't, like I say, from a statistical point of view, I don't understand it. I might be missing something medically, but I don't understand it at all, why you would even contemplate it. But there you go. I'll have no doubt that they'll try and make it mandatory as well, part of the World Economic Forum agenda. But anyway, back to here, you can see that the market just traded and drifted lower until the end of the session there, and then has continued to consolidate. So let's have a look overnight and see where the markets are now trading. This is the weekly charts of the DAX, and the reason I've brought up the weekly is because I wanted to see how close we are to the all-time high, which was back in January. This is where we are, and you can see all of the other resistance points just here, particularly through here, where the markets had a recent move to the downside and correction, which we can see in these 2 weeks here. Well, 1 week down, 1 week back. So we'll keep an eye on this. Let's have a look at the daily chart just to see where we are. And this is a sort of a more in-depth look. This is where the high that I've just marked up on the weekly chart comes in. So 13,463 is an area of resistance, also along with here as well. So we'll keep those two in. There is no news today, so the market's got to make its own direction for this move to the upside. And there's a big move now actually created from here up to here. Let's just have a look out of curiosity, see how many points this is. We've got from here up to here, which is 2,000 points. This market needs to have a pullback from these highs, so I wouldn't be surprised if we don't see prices drifting lower to do this. It's full of froth at the moment, that's for sure. Meanwhile, overnight and straight away, we can see that the market's struggling with the DP and the 200 MA. So any bounce through this and then back will help with a retracement in the daily chart. Prices managed to get above the DP, but not the 200 MA overnight, and are sideways at the moment. And finally, let's have a look at a few other things. We've got This is market nirvana. JP Morgan now sees S&P rising to 4,000 by the end of 2021. We'll see. We'll see. The equity market is facing one of the best backdrops for sustained gains in years. I mean, it's already overvalued. I mean, how much higher can you pump it? Given the pandemic, the lockdowns, the destroying of the economy, the blatant destruction of the economy on false figures and modelling, how can it recover? But the implied volatility is backing up that sentiment at the moment. There doesn't seem to be any risk as the implied has moved lower. And this is shown here with a drop to 2161 there. So there you go. Anyway, no news today, so it's a no news Tuesday. It could be a quiet day or it could be a drifting to the downside, unless, of course, Trump decides to jump ship, concede, which I very much doubt at this point. He can stay in the White House until the day before inauguration. So he still remains in charge as well, which the mainstream media are giving the impression that Biden has already taken over, which is utter nonsense. So we'll wait and see. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.